All right, good evening, everybody. Welcome to tonight's live stream with TG Watkins. If the market feels like a roller coaster lately, you're not alone, but TG has been crushing it with precise intraday and swing trades, even in this chaos. Tonight, he's pulling back the curtain on the exact strategy behind his 260% win in Tesla and how his dual time frame system keeps finding high probability setups in this wild volatility. Buckle up, because this is going to be good. All right, DG, I think everything is ready to rock and roll. The floor is open, the stage is set. Take her away, my friend.
Well, thank you so much, Daryl. Let me get everything up and running here on my side and seeing, yeah, lots of people still pouring in, so that's good. Let me get the camera up and running for you guys. Hopefully less blue now. I know that my background ever since got the office remodeled and got this color back here. I need to make sure all the lights are on, otherwise it's looking a little bit bluey in here. But yeah, I think it's good now. So, yeah, let's kind of start running into all of this. And yeah, still see more people diving in. So, thanks again for everybody tuning in. We'll also have some recordings. And then we do also have another one scheduled for next Wednesday. And you might be asking yourself, hey, why two? Well, because there's more time that has gone on, and because the way that I'm trading has been dual. So, swing trading and day trading. This one's going to be more of a overall market view of what's happening, especially since the market has completely changed over the last few months. And then the other one's going to be a little bit more focused on the SPX 0 DTE day trading and kind of showing you guys how that has been going and what we've been doing with that. So, and I'm sure we're going to have more information in a week from now based on how this market is moving so fast. So let's kind of dive into it. We'll see how this all pans out for everybody. And thanks again for tuning in. Remember, this is for educational purposes only. So let's keep the lawyers at bay and all have a good time and through here. Why don't we? Okay. So how was it going? This is basically how we were all feeling into the end of 2024. The market was going up. The small caps were starting to take off. We had interest rates coming down. Things were doing wonderfully. We had stuff like RCAT that now we didn't get anywhere near 1,000% on this, but we were able to catch some moves in through here. But what was happening underneath the surface is that basically once the market realized that we were not going to crash and that interest rates were going to come down, small caps like this started to take off. And from basically the beginning of where these things started to rise, our cat went 1,000%. And we were seeing a lot of names, a lot of small caps coming out of the blue, kind of like 2020 all over again. And there was a lot of opportunity, seriously. And then you just start seeing them really start to take off in through here. And that's when I was able to really see, hey, this is going and this is doing really, really well. So big opportunities out there. And this is how I was able to grow one of my accounts. I decided, hey, $25,000. We like to make sure we can show people this is possible with smaller accounts. So I opened up a $25,000 account, and within 4 months, I was able to double that to 50,000 just using stock. Okay, no options or anything here, no zero DT, just swing trading stock. And then actually by the end of December, I was able to get that up to $64,000, which I think was like 140% of my math, if I remember the math correctly. But at the time that I was starting to log this, I wanted to say, hey, I would back down to about 56,000. So 125% in 6 months, still pretty darn great. But the first big batch of it was, hey, I just wanted to see if I could double it. I did that in 4 months and then some. And then the market changed. So we've been pulling back from this stuff, and I'll show you kind of how that whole experience has been going. But so far, I wanted to show you guys this account growth that we've been doing in the Moxie room. All right, and so how did we do that? Well, names like Reddit. I'm sure a lot of you guys know about Reddit. I'm sure you understand that that was an IPO, and we had traded this a couple times, but I knew at some point Reddit, it's a big name. Everyone knows about it. It's going to be a big thing at some point. Kind of some AI stuff in there too, because that's where some large language learning could be coming in. And so we were able to actually nab this thing. Now, this is the daily chart. And on the hourly chart was really actually where we had the setup. We had the Moxie price trigger on the hourly, but we did also get the Moxie price trigger on the daily. But we got this thing all the way down here, and this thing just took off. Now, most of you know I don't enjoy hanging over, trading over earnings, but I had a feeling this thing was going to be good. So we hung on to this thing, and great, great, great move. And my Moxie system was telling me, hey, at some point in through here, we need to start taking some profits. So I figured this was a killer move. You never know what's going to happen. Let's start cashing some in. So we had our first exit at 125% gain, but this thing wanted to keep going. So I'm happy that we still hung on, and we took our final exit at 184% because that's what the Moxie methodology, my indicator and everything was telling me what to do about here. And so you can see right here, that was I think, a pretty good reason to kind of just, hey, we had a really good trade. We made over 184% on this thing. And so that's kind of where we tapped out on that one. Now, here's the other one. This is Soundhound, another one that was kind of crazy back in the day, and then it kind of settled in for several months. And I, again, knew I was like, this thing's going to do something. And this one was actually after earnings. It gave us a really great pullback opportunity after earnings. And then again, when this thing popped up, it was 127%. We took some profits there. And amazingly, we got the pullback. And I said, I think that there's still more. So we added back into the position right here. And then you can see from this leg, there was 50% gain on that second ad and 221% from the overall entry that we got into it. Now, mistake number one that new traders and inexperienced traders make is that they don't have a system like this with the Moxie indicator that tells you, gives you some rules and parameters like how do you know when to get out of these things? They either stay in for too long thinking this is going to keep going, or they buy at the top. And that was definitely to the top. We got out at 221% gain on this thing. And sure enough, that was the top. And you guys can look at this today. It never came back. That was definitely the end of the run for this one for now. So that is really something that I want to be able to tell you guys and show you that with the Moxie system, there are ways to find these entries, have them be precise, and then also know when to get out of them because, the other half of trading is making sure you keep the money. Making the money, okay, we can do that, but you got to learn how to keep it. Here was another one, Tesla. Now, hopefully you guys kind of know that Tesla has a leveraged ETF, TSLL, just like a lot of the other big stocks have these large single stock ETFs. This one was fun. We had to hang on to this one for a little bit. There was even a little bit of a fake out in through here, but we got into this one all the way back here before the election. And I got to say, I saw this setup coming before the election, before anything else like that. And I decided to just roll the dice on that and see what happens. And sure enough, we all know the history. This thing shot up. And once again, look right here. That was our first exit, 204%. And this is again on the leveraged ETF for Tesla. And then we got here, 260%. And that was the absolute top. Nailed it. Okay. So that thing was fantastic. I had a whole bunch of reasons to be exiting right there. And it's not like just a guess. I mean, if you guys look at this and you'll see time and time again, I'm able to nail these tops. And it's because of the Moxie method that I'm able to communicate to the subscribers and anybody else who will be taking the class with me on April 5th. So I love the subscribers that are in here. Lulu is kind of one of the newer ones, and he is learning about one of the Moxie setups that we talk about called the trampoline move. OMG, like, oh my God, TJ, I love the trampoline so much. It's so promising for a reader, and one can relax knowing that it's going in the direction for a while, so one can handle the pullback. So again, the trampoline is like, okay, you're going up, up, up. You take a dip. It turns out it's a buyable dip, and that's what the Moxie indicator can help you with. And so you can handle the pullbacks a long way. And yes, this is starting to sink in for me at the moment. He's starting to get it. Okay. This is the stuff that I love to see and I love to hear in the Moxie room is that I'm not just giving you guys the fish. Okay. We have people in here who are learning how to fish because you know what? Hey, someday I might be like John Carter. I'll have some kangaroos. I'll have an island and I might not want to be here. I'm going to sail off into the sunset. So I want to make sure I leave my mark and make sure you guys actually know how to continue to trade and can provide for your family and anybody else that you want to out there. So Tesla did have a trampoline move. That's why I wanted to show you guys this here. You can see price was below the 50 and the Moxie indicator was above 0. There you go. And look at that. Look what the trampoline move set up. A 260% move on the leveraged ETF. So real fantastic. How about BitX? Again, leveraged ETF of Bitcoin using just the stock. And after I think it was maybe 7 months that Bitcoin had pulled back after its big first initial move out of the bear market, right there, nailed the entry. It flagged for a little bit. You can see the Moxie price trigger on the daily chart. So that means the hourly actually fired a little bit sooner. That's why we got in. And sure enough, this thing rocketed up 109%. And we took profits right here. Now, this one I really did think we were going to go a little bit further. So on the pullback, we added back into it. So took profits, waited for a pullback, got the pullback, and I would say that that was a decent move because you can see it did go right back up. But, the market started to change, didn't it? Things weren't working. And this is what happened. We got the Moxie price trigger and then we got stopped out. I wasn't entirely sure this market was going to fall apart, but this is why I like to use stops because, well, I don't have to care what the market thinks or what I think of the market. My stops will get me out if something happens like this. And sure enough, 8% loss. So no big deal. You have 109% win, 8% loss. That's how you stay in this game. So how is it going now? Yeah, this is kind of the thing. We were doing great. The market was just loving it, loving life, doing well. We got kind of that Trump bump, as everybody might know, and the market was doing well. And suddenly everything changed. Now, wait, we can place the blame on a few different things. We know tariff. I'm going to get into that in this webinar and talking about some things. But there's nothing to argue about. This is what's happening with the market. We need to be aware of it. We need to adapt and change with it. And so, how about RCAT? Remember, I said RCAT was going up 1,000%. Now it's going down over 65%. Of course, it's always smaller on the way down, but lack of opportunities to the upside for sure. And this market has definitely changed. So, before I get into that, I want to let you guys know I'm sure we got a lot of new faces. I see a bunch of numbers here for people who are logged in. So, thanks again for being here. My name is TG Watkins. I'm director of stocks at Simpler Trading. You guys can see me a bunch on the social media things. And amazingly, we actually just came back. What was it, February? I think it was. We were at the Las Vegas Traders Expo, the money show. And this is actually how I got my career here at Simpler Trading. I had my own company, Moxie Trader, doing my own thing. My dad actually introduced me to stock trading. And, several years later, I run into John Carter. I say, hey, I would love to have a job. And now I start working at Simpler Trading. And from being on the other side of the mic and where you guys are and sitting in chairs, watching other presenters, studying and learning this stuff, I am now one of the presenters. I'm up there talking and presenting at the Money Show. Kind of gives me goosebumps to think about it too, to see the progress of where I've come from. And so it's possible. That's really what I want you guys to know is I didn't know anything about trading, but you get at this, you keep learning, you keep sticking with it, you'll learn, you'll get better. And you know what? Maybe one of these days you guys can be on the other side of the microphone too if it interests you. And to show you guys a little bit about my style, my trading style, my brain, how the Moxie indicator works, how my trading works. I'm a pilot, I'm an engineer, mechanical engineer. And so this is what I do. We have checklists, I think mechanically, and I think it really resonates with quite a few people on how we trade. I'm able to teach and coach and communicate this stuff in a very, well, engineering kind of way, like go, no go, black and white. Okay, here are the rules. This is the steps. This is what we're looking for. And I think it really resonates with quite a few people. So I wanted to kind of show you guys that. I'm sure we got some people who know me pretty well. I've seen this presentation, stuff like this a few times. So I did add a few pictures coming up here. But this is us in the Pacific Northwest. These are one of our airplanes that we like to fly. It's Washington, so we get a lot of rain and a lot of weather, and this is one of them. So I figured you guys might like seeing that. And then here are some of the new ones. My family and I went out to Winthrop. They have a hot air balloon festival, not quite as big as the one in New Mexico, so that's kind of on my bucket list too. But my parents decided to fly in. We drove, and so we did this, and we were walking out to the airplane. I was like, man, that's a great picture. So really wanted you guys to see that. I know we so have some aviation fanatics in there and people who just like to kind of see this stuff. But yeah, right up in there next to the hot air balloons. And this was the view coming into Winthrop. I mean, look at those snowy mountains, just beautiful stuff. We live on the water, so like to do some boating stuff and wake surfing, all that. And then also, I was also just on a couple trips, Winthrop and then Austin and some other things. This is my travel setup. So for those of you who travel for work, or maybe we have some airline pilots or people who want to manage their trades while on the road for whatever reason, even for vacation, it is possible to travel and trade at the same time and actually do it well. I recommend a couple different screens. I have three because I also run the room, but you need at least two. And so you get a decent computer, maybe nice mouse pad and some trading setup. NomoFomo is one of our subscribers. Man, his travel setup is incredible. So ask him for some pointers if you guys are interested, but certainly possible, and I can definitely work on the road. All right, so we kind of get into what happened. Why did the market crunch like this? I'm sure probably a lot of you guys generally know, everyone keeps talking about tariffs, but there's a little bit more underneath the surface as to why this is happening and how long is this going to last? Because everyone's like, oh, buy the dip. I can't tell you how many financial influencers I've been seeing on YouTube, and today I was on the mic talking about this stuff. And they were mentioning it too. It's like, man, I keep seeing a bunch of people saying that millionaires are going to be made by buying this dip. And a lot of times that's true. But I kind of feel like this has changed. This is not, I don't feel this is a buy the dip situation, or at least not a buy and hold. I'm buying the dip, but we sold some of it today and we're still in a challenging spot. And I think that there's some more volatility and some more unwinding that is going to happen, and we need to be prepared for that. Okay, so careful about listening to the Instagram and the TikTokers and stuff like that. I'm a little scared for them. But basically, what's happening? we got tariffs, we got Doge, but we also have Treasury Secretary Bessent coming out here and talking about the stock market. And he's saying, look, the market has been up 20% this year, 20% last year, and 20% the year before. This is unusual. And this isn't normal. I'm like, right? Aren't we supposed to be expecting 8 to 10% every year on average? But we've had some of these killer years. Well, what's happened? The market and the economy has been hooked and become addicted to excessive government spending, and there's going to be a detox period. And so, if I can phrase this correctly, what they're trying to do is get the economy from like a government spending growth economy to a private sector growth economy. Again, take your politics out of this. We're trying to understand what's happening out there because, hey, we're along for the ride, aren't we? And so we need to understand what's happening, and they're trying to change gears a little bit, for better or for worse. Again, that's your politics, but we need to see what's happening. And right now, the market understands there's some changes. There's some changes happening, and the government's going on a diet. We got Doge out there doing its thing, and we just need to understand the market, the punch bowl is getting taken away. We're going on a detox period. Whether this lasts or doesn't last, or it's good or bad, we don't know yet. We're gonna have to figure it out. But this is what's happening, and the market is having to kind of reestablish itself and refigure, like reprice, right? It's trying to reprice itself to figure out how this goes. And kind of until maybe we start to see some of these changes take effect in a beneficial way, we're going on a diet. And so, yeah, the market's coming down for a little bit. So what does this look like? And aren't you guys like realizing that didn't we just hit a new all-time high? Yeah, I was at the Money Show doing my presentation stuff, and I was fully prepared for the market to make new all-time highs, and had to get a little bit of a reality check when I came back from the Money Show. Because yeah, my presentation was like, this is great, everything's doing well. I think we just handled a bunch of dip situations that all got bought back up. I think the market's going higher, and I was right. I was right for about a day and a half. The market did make new all-time highs, and then it totally turned around and came back down. Now, in the back of my mind, and as I was talking to the subscribers during this time, I was prepared for this because what I was seeing as a potential setup, again, the Moxie indicator, the system, was telling me, hey, we have a potential inverse trampoline move here. Okay, we have price over the 50, but the Moxie indicator is below zero. Potential inverse trampoline move. That means this could be a fake out to the upside. So I was aware of that. I was looking for clues, but the market made new all-time highs. And so that's kind of another mistake that traders make is that they look at this and they get faked out by this and they're thinking, well, we just made new highs. Okay, so this is a pullback. Okay, well, it can't get that bad. We just made new highs. And so they either don't get out or they continue buying, and then they get run over when, surprise, we get a 10% correction in 3 weeks, which is very fast. Okay, you can get definitely run over by this. And now that this has happened, okay, so now those traders got stuck and now they lost a bunch of money and they're in here and now they're just hoping and praying that things are going to come back. And maybe if they get scared out, they're like, well, I'll come back when the market's strong. Well, think about it. What happened in the 70s? We might not be strong for a while. Maybe you come back when, okay, the market's going to make new all-time highs. Well, it might be a while. What about 2016 area? Market went sideways for a year and a half or two. Okay. So we need to be able to learn how to trade through some of this. And whether it's a bear market and you kind of day trade, or if it's a choppy market, again, you day trade, or you kind of need to understand that even within bear markets, there were some really, really big rallies. And going through that, I figured out ways to figure out when the market was going to rally. And you can take those. You can make some really good trades off of those as long as you know when to get in and when to get out. And that's what the Moxie indicator and the methodology that I teach allows us to figure out. So that's why after the market made new all-time highs and then dropped like this and then continued to drop, I said, oof, this shouldn't be happening. And I could see what was going on. So we went to cash. That is very important to know. Like lessons learned from 2021, right? All my stops hit at the same time. Go to cash. And the market's trying to tell you something. And sure enough, we went down 10% in 3 weeks. That was a very, very fast move to the downside. Now, again, we had a little bit of a heads up that something like this could happen. The second half of February is the seasonally weakest point of the year. I actually kind of thought that maybe we had gotten a lot of that out of the way because the market remarkably handled some really bad, news that took it down, but then it bounced and took it down and bounced. So I kind of thought we had front loaded that. Turns out we didn't. The market definitely went down after that. But think about this. If February is the weakest and then March is the strongest, what does that look like? By the dip. right? Because if we get a really weak point, the market is a dip, and then we get a really strong point. This is perfectly lining up with what we are seeing right now. Now, to what extent, that's what we need to debate. But we did see the second half of February being the weakest. Then we kind of saw a turnaround in March, and now we're starting to actually see some up moves in the second half of March. So again, we're going to have to see how strong, but it makes sense. Dip and then rally. We'll just have to see how far. But yeah, this is what the seasonal effect kind of looks like in through here. And IWM, this was another thing, using the Moxie method, looking at this stuff. This was another thing that I was communicating to the subscribers at the time and saying, I'm aware of what's happening. And that was, this could be a bear flag as price flagged sideways into the underside of a downtrending daily 50 with the Moxie indicator below zero. But what kept happening is the dips kept getting bought up. And you can even see that we had a double bottom in through here. So I was like, well, the market's not going down yet. So maybe this is actually building some strength and maybe we're going to start going up. So I had my levels. I had what I was looking for right here. When price was starting to get back over the hourly 50, I wanted to see if it could do that. And the exact moment that it should have was the exact moment that it failed the 50. And that was my confirmation. Then you can see right here, it just got rejected by the 50. And man, it just took a slide to the downside. And you can see that was basically price perfectly getting rejected by the underside of a downtrending daily 50. So if you guys want to trade to the short side, well, how do you do that? Well, Vijay, one of the very active subscribers in the Moxie Room, love all you guys. So anybody who's in the Moxie Room, love you guys. So thanks for letting me clip some of the words you guys post that you have out there. But he's saying that, hey, Moxie nailed it. He had over 20 puts on it and it worked like magic. Just whatever you do, get into your bullish position, whatever you do to get into your bullish positions, just do the opposite with the Moxie indicator. Simple as that. And that is true. Basically, when you just take everything I teach to the long side, you turn it upside down, and that's how you can trade the market to the downside. Anytime you want to short. Okay. The rules are very simple, the principles are there. You turn them right side up or upside down, or you just apply them to different time frames. It's all the same basic rules. And I think that's also why people gravitate to the Moxie Room, the Moxie Indicator, and this methodology for trading. All right. So, I've been at this for a long time. I have seen enough downturns, and the most recent bear market in 2021 really gave me some fresh stuff to work with and to learn from. And so I've seen this enough times to really understand when to go to cash. And so right after the indices failed that long setup that I was looking for, and they went down hard, I was like, ooh, yeah, this is not good. And so in order to prevent a lot of damage, I just posted. I mean, look at this, 7:13 a.m. I'm on the West Coast, so that's like 45 minutes after the market opened. I said, go to cash. Okay, this is bad. Let's watch out. And I'm so glad we did because, hey, there's no pride here. There's nothing to be like, oh, I'm losing, or oh my gosh, I went to cash. Like, whatever. Hit the eject button, get out, go to cash, protect yourself. Because look what happened. Thank goodness we did. All right. So, as a trader, I look to understand what's really going on out there and what's happening. Again, you got to kind of put politics aside because honestly, in 2020, the market went through the roof when Joe Biden got elected. Okay. And in what is it, 2016, the market also took off when Trump got elected. So, the market really just likes to have decisions made. Okay. It likes to know who's the president, what's the administration about. It's kind of agnostic in a way. It just wants to know where are we going. And then they redirect their money and they figure it out. So really, sometimes just put your politics aside, and it's important to understand what is this administration about. In 2020, I was killing it with the small caps because, the Democrats, they're for cannabis, they're for electric vehicles, they're for alternative fuel, they're for solar, they're for wind, like all these things. And that's how we were able to find all of these crazy little small caps that were going 200, 300%. And we were just doing great. Okay, well, what is Trump 2.0 about? Well, once we figure that out, then we start going after that. Okay. That's also why Trump 2.0, we're realizing that he's different this time. He's even said right here, he's got bigger fish to fry and he's even said, I'm not looking at the stock market. Okay, this is a very big difference and change from 1.0 because he was very much watching the stock market and he only wanted it to go up. And he's kind of like, well, I'll do whatever I need in order to make it go up. This time he's like, I'm willing to handle some heat, okay? Because he's got his eye on other things. And so, following his tariff announcement affecting Canada, Mexico, and China, Trump suggested that his focus is on a broader economic goal, okay? We just have to understand these things. And that's kind of what's happening. So, we need to understand that we got now Besant saying something, Trump saying something, And then we have Jerome Powell also saying some stuff. And this market, it's kind of it's on its own. It's on its own for a while. There's no put underneath right now. There's no safety net yet. Okay. And so this is another way of kind of seeing that the market started to shift. Trades were getting more difficult. They weren't just working as easily. Look at Toast. We got in all the way back here. Great trade. Nice incline. Got in there a little bit. Things were working out well. It also jumped up on earnings. Look at this thing. Very happy. 40% and 51%. And again, nailed the top. And I got out just a little bit before even the Moxie indicator fired. So this is the thing. It's not just me, it's the indicator. It's me knowing how to read my indicator and say, "Oh, hey, this is the top. We should get out." Because look at that. I mean, within a day or two, we nailed the top and this thing pulled back. Well, once again, here's the Moxie price trigger, okay? And we were seeing this heads up. Here's price going down, here's the Moxie indicator going up. We saw this as a heads up that this thing was going to come back. So we got in and we even added to it because, well, it kept working. But then what happened? Look, we got out here plus 1%, and then we got out here plus 2%. Well, that's not good. Why is this more difficult? What's happening? Well, this was the beginning of the market starting to communicate to us that it knew things were starting to change. That, this tariff talk was starting to happen. Bissett was starting to come out there and talk about things. And Jerome Powell was saying, yeah, I'm not going to cut rates. And so the market started to fall apart. And these were the things that we need to start recognizing as vibe shifts with the market. So they're working great, and then they became harder and harder to trade. But knowing this and making sure we actually kept these trades decent was how I was able to keep my account safe. And this is how I teach you guys how to handle these things too. And so now we get on to Jerome Powell. And you guys know the whole joke, the Powell put and everything else like that. Well, Jerome Powell has recently come out and articulated cautious stance on cutting interest rates, emphasizing that the Fed is not in a rush to adjust monetary policy despite the market expectations of such or the economic shifts under the Trump administration. Okay. He's even said that the economy is strong and he's betting on basically that it can handle the detox from the government spending. Remember, as Besant put it, we're going on a detox, we're going on a diet, and that this should be able to handle it without needing a rate cut lifeline. Okay. Now, we all know Trump is actually watching the market. We all know Jerome Powell will have a point at which he's going to cry uncle, but there is continuing word and messaging out there that they're only going to do one rate cut, and that's probably going to be in June. Okay, so that's kind of what everyone's planning for. That's still a few months out. Okay, so there is no immediate safety net underneath this market right now, and that's what we need to plan for. That's why I'm concerned about the TikTokers saying buy the dip and become a millionaire. Like, okay, careful. So this isn't terrible because there are bounces and downtrends. We've been proving it. And you know what? When the market gets really, really oversold and we get really big bounces, there are some really quick trades to be made. We can also short. There are opportunities out there. So let's stay in the game. And also now that we have volatility like this, I mean, even look at today. There was a really good put trade today. I did get the entry. I didn't hang on to it long enough, but I was correct on that entry. And so we cashed out a bunch of positions and then we actually went short with the market. And so there are just a lot of opportunities since this market is really moving. All right. So how about some of the setups that started to fail? This was another indication to me that the move down in the market was going to be a deep one. And because, as the market was coming down, I'm looking, hey, is the S&P going to bounce at the daily 200? Is it going to bounce anywhere? I kept looking for bounces. And the market didn't bounce. And tickers that I was trading that should have moved up or should have bounced when the market bounced weren't. And so I probably tried this one too many times, but reasonable, -7, -2, -4. Okay, you got to pay to play and kind of figure out and test the market. So that's kind of what I was doing here. But the idea is these were small losses. It's not like I got in here and then I exited out here for like -20%. No, these are testing the market and I was trying to see, are we going to get any traction to the upside? And we weren't getting any. And that kept telling me like, oh boy, the market's working its way down. So look out below. We need to hang on a little bit longer before we can finally start loading up on the long side. So along with that, again, seasonality, we knew that February was the weakest. We knew that there was a rebound in March. The numbers are here. You can see that in February, I can make a different cursor to February, down and unchanged, 15 and 26 out of the years. And then March generally, or March something, we're at 22 up. Okay, so definitely the seasonal change. You can see that also here in just the graph. Now, again, I think we need to be careful. The market is not exactly in a place where I think it's just going to turn around and rip, but we do have some seasonality to where we're strong. I'm going to see if we can keep going up a little bit further in the market, but I do think we need to be careful in through here. So seasonality might be a little bit weak this year. So don't bet all your eggs just because of seasonality. But we did make a perfect 10% correction. So that really did hit the bottom. And I think that was the 11th. And so we actually started getting into trades, bullish trades, on the 13th. So again, the Moxie system and how I'm able to teach people, we got into these things. We figured out where the low was, and then we managed to hang on. And today we exited. So this is what I wanted to show you. Look, today and this morning, 5 minutes after the open, I was able to figure out, yep, I was even prepared yesterday. We sold out half of Tesla, and then today I was like, oh yeah, I think we're going down. Let's get out. And so in the central room and in the Moxie room, I put on some option trades, and these were longer dated, not just zero DT. These things were actually April, April options. And so we did a call debit spread. So we went long, we bought long calls and we sold those for 35%. Hey, not bad. And then we also sold put credit spreads and we got 50% gain out of that. Now, the reason why I did this is because we needed to start thinking about, okay, how do we start preparing this? Because remember, mistake number one is buying tops. Okay, that's what new traders do a lot oftentimes. They think things are looking great. In fact, usually when they look too good, that's when they pull back. So it's a little counterintuitive. Mistake number two is selling bottoms. They finally throw in the towel. Like, have you guys ever heard of what capitulation is? Unfortunately, capitulation oftentimes is the retail traders who are still kind of new at this, and they finally throw in the towel, and they throw in the towel at the kind of the worst possible moment, and that usually marks the bottom. And so we actually waited for that. And I'm also teaching some ETF stuff with this class on April 5th. And so using these ETFs, I was able to see high volume days, which actually told me that the bottom was in. There were two specifically that I'm thinking of. And so along with that, we started to buy into this. We started putting on our trades. And what we did specifically down here is you need to start planning this. Okay. Buying premium, like going long calls, probably a little bit risky in this market because the market had gone down 10% very quickly. I don't think this thing was going to just spring back, okay? And so I did a little bit, 25% of what I was going to trade, I was doing buying premium just to see, just in case it worked out, let's see what it does. But really, the most of what I was doing, 75% of the trades that I was putting on was this put credit spread. And that's because I just needed price to go up in any fashion for this thing to make money and to work. And when the VIX was super high, 30, and then it starts coming down, basically when the market stops going down, then that's going to help the put credit spread. So that's why I wanted to emphasize that strategy over the long call strategy. And you can see why 35% versus 50%. And it was an easier trade. I really didn't have to worry about it much. I just needed to make sure the price didn't go down anymore. And so that's how we then figure out what kind of trades we're going to be taking on like this. And then part of the other thing is recognizing the difference between a buyable dip and a bounce and a downtrend. I think this is a bounce and a downtrend. Therefore, I set up my trades for that. Okay. If it was a buy the dip, totally different trade situation. Also, give yourself time. Because I didn't think this was a buyable dip and it was going to be a bounce and a downtrend, I figured we're going to need more time for this thing to recover. And sure enough, it took something like 13, I think it was 14 days for this to actually work out to where we took our trade and then we exited. So I needed plenty of time for that to work. And it did. I'm very happy with the trade that this went. And so that's basically what the Moxie methodology was able to do, was to show me that this was the low. Now, mistake number three that traders make is they just miss out. They don't know what's going on. They can't see it clearly. They don't have a system that works for them or that they understand very well. And they don't know when the market is actually going to work. Or they think, oh my gosh, this thing's so bad, it's just going to keep going down. And maybe they actually start shorting at the lows because they think, oh my gosh, this market's so weak, it's going to be a bear flag and we're going to keep going lower. No, this is where experience and having a methodology that works for you, where you can recognize this, you withstand some of the noise, the bumps, and then you head up to here. And if you guys remember, we're all the way up here. Okay, so this is where we were able to figure out the low, and now we're up here. Totally nailed it. And here's another thing. So this is also part of me teaching you guys. I always like to say I'm kind of a detective looking for clues, and it's not just the Moxie indicator, it's how we use the Moxie indicator with other things. And what I like to do is I like to use the Moxie indicator with the UVIX or the VIX. And that was telling me some stuff too. Basically, and I posted this on X. So if you guys want to go back and look, 313 is when I posted this, and this is when we started getting long on the market. That was the day. Based on the Moxie rules, this said, hey, this should start going down. The VIX should start going down. That means the market should start going up. And sure enough, it did. The VIX is all the way down here. The UVIX is all the way down here. And sure enough, the market started moving up. So yeah, it's just another tool that we use. And as I said, I publicly posted this one on that day to show you guys, hey, I think the low is in. So yeah, we put it out there. And then have rules and have a process. I mean, for me as a pilot and having the checklist, this is what I do. This is how I communicate to you guys, and these are the things that I can teach you. We've got the cheat sheet, we've got the checklist with kind of a flow chart. I've got all these things that I'm able to communicate to you, so we can all speak the same language and we can all understand the same methodology. It doesn't change. I've been teaching the same thing for years at this point, and that's what I think people really like is that it's the same thing, just over and over and over. That way they can learn it and they don't have to keep adjusting, oh, it's this and this and this. Like, no, it's the same rules. You can apply it to different time frames, or you can flip it upside down when the market starts going down. Okay. But that's what we do. And that's what me as a pilot, that's why they call me the profit pilot, and that we start trading like this. And here was another one. This was another really fun one. Let's see, I think it was RX. And this was the hourly chart. It took us a time or two to get in. It was still kind of noisy down on the lows, but we got right back in when I said, I think it's going to go up. And based on what the Moxie indicator was saying. And sure enough, it did. And you could see it was still very noisy in through here. Lots of just kind of chopping around. But I said, hey, the rules are telling me stay in. You can see here, the Moxie indicator stayed above zero. So even though price was dipping, the Moxie indicator was staying above zero. That's a trampoline move. And I said, let's stay in. In fact, if you guys want to get a position, you can buy the dips. I think this is going to work. And then sure enough, started to go up, up, up. And we actually took profits at 80%. I really thought this was going to go further considering how long this thing was setting up for. But we cashed in profits at 80%. And then the weekend happened, the market rolled over, and I said, oh boy, this is going to be a big one. Go to cash, and we managed to salvage the rest of this one at plus 40%. So, I'm not exactly going to complain about a 80% and a 40% win on something like this, but thank goodness we got out because look at where this thing went. I think this is now below our original entry. That's how rough this thing was, and that's what I could see from being experienced in markets like this. That hey, you just got to get out sometimes. So here's another one, hymns, kind of a fun trade as well. And the Moxie indicator fired. You can see right here, there's the hourly chart. There's your Moxie price trigger. Again, the Moxie indicator is really the one telling me what to do here. And we bought it there. And I think, yeah, we cashed out some there, 40%. I wasn't quite sure how much this thing had in it. And then the Moxie rules said, let's get out. And I'm happy with this. Yes, it went higher. Basically, a combination of news and momentum sent it further. I think, but there was a shortage of Ozempic. And so, yeah, you guys know there was some news out there. And it sent it up. Yeah, it would have been nice to be along the ride, but get your piece. Okay, you're never gonna catch everything. You're never gonna touch all the water. Get what's yours. We made 40% and 60% on that move. And you know what? As soon as that little scare or shortage was over, boy, this thing crashed. So make sure you do what you can. Always cash in green tickets. Don't be too mad about that because look what happened. This thing is down in the dumps after that. So yeah, we got our part. And then this one's kind of fun. This was HNST, another one of the early birds that we were catching. Look here, Moxie price trigger, guys. It's the indicator. It's the one telling me, hey, heads up, because you can see price was coming down, Moxie indicator coming up. There's your trigger. And then you know what? Look at that pullback. Trampoline move. Just like Vijay was talking about, just like Lulu was talking about, the trampoline setup. Lulu loves that one. And so there's your trampoline. And that's a great buy the dip opportunity. And look what it did. That's why I call it the trampoline move, because like you jump on a trampoline and it shoots you up like that. So this one we cashed in. Look at that. 103% and 142%. And once again, just absolutely nailing the top because the Moxie indicator. The Moxie rules were telling me, hey, get out. And then look, there's your Moxie price trigger. I don't know if you guys can really see it there, but there's your Moxie price trigger telling you, like, get out of this thing. And sure enough, down it goes. Now, because yeah, I was thinking, okay, maybe I didn't quite see that the market was totally going to roll over yet. In hindsight, this is a bear flag. We can clearly see that now. But at the time, you were seeing that there was a level holding, and you could see that the Moxie indicator was firing a couple times. So we took a couple trades on this thing. I wanted to see if we were actually going to hold, but it just wasn't working. And you know what I did? -3, -5%. not bad. Pay to play. Got to test the water sometimes. But if you do that, making these huge gains, 103, 142% compared to these small losses, that's how you're going to survive in a game like this. Richard, yeah, how do I find the tickers and stuff like that? Yes, there is a scanner. That's one way to do it. We have a couple scanners. You can scan for the trampoline moves. You can scan for the Moxie price triggers. Absolutely. The other thing is, you do this thing long enough, you just hear about names, and you just kind of start knowing they're out there. Gosh, my dad even sends me some because like, he's out there kind of scanning stuff. Yeah, you come into the Moxie room, people talk about stuff. You just start hearing about names, and really, that's the great community that we have. We have a lot of other people, other traders who come in as subscribers. Everyone's kind of doing their own trades, talk about things, talk about news. It's a great environment to be in, and I think you'll just even learn from osmosis of being with other subscribers out there too. So that's another way too. And so this one I thought was quite interesting because it perfectly represents the four stages of a stock market cycle. I mean, how crazy is that? And this was a matter of months. Look, I guess that was October, basically to March. And look at that. Perfect. Perfect four stages of a stock market cycle. It's not often that we see them that quickly, but that was kind of how fast this stock market was. We went from interest rates getting cut, so small caps were going through the roof, to now tariffs coming in and the government going on a diet, and now we've come back down. So very interesting to just, wow, how quick did that happen? Um, yeah, so somebody's asking me, do I see the bottom of the market now, or do we still have a way to lower? I think you missed the first part of my whole presentation. Basically, I'm saying I think we still have lower to go. I can at least say I don't see the bottom yet. Okay. So rewatch. We're going to record this. Go ahead and rewatch the beginning of this, and that'll tell you the rest of the answers. So you guys can do this. Remember, I used to I used to go to these seminars. I used to be on the other side. My dad started taking me around when I was 12. I mean, I know maybe you're not starting at 12, but honestly, I really kind of got into this in my mid 20s, and we started going around to seminars and other classes, and I just stuck with it. And then it started making sense, and I kind of do my own thing. And then I made my own indicator, which you don't have to do, but it's possible to get someplace with this. And I think some of the key takeaways that you guys need to do if you're going to be learning like this is number one, you need to know when the market is easy versus difficult. I mean, go look at that last slide that I showed you of H and ST. When the market's easy, it's doing great. You can clearly see when things are setting up and doing well. But then you can start to see kind of in that bear flag area that I showed, it gets messy, it gets complicated, things aren't working. Why isn't this happening? Man, they go up and they come back down. Hmm, maybe things are changing. It's not quite as easy. The environment is changing. Be aware of that. You need to start figuring out, like, don't keep pressing it, okay? And then when it is good, size up because that doesn't always last forever. Like, think about 2022. I made a bunch of money in 2022 in 4 months because that's how crazy the market was. But it was a flash in the pan. And even 2024, these small caps started to take off and blow up, and it was a short amount of time. So when it's good, size up because you need to be able to take advantage of it. Like, when the sun's shining, go make hay. Um, Learn how to day trade or go to cash. Learn how to go to cash. Okay. Sometimes people just keep trying to trade through things that they don't have the skill for. Okay. If it starts getting crazy like this, start practicing. Paper trade. Stay in the game, but figure out how to keep yourself safe. So either day trade or go to cash, practice, paper trade, do something like that. Don't walk away because you're gonna lose touch with the market. Okay. You don't want to just walk away. You want to still stay engaged. You want to know what's happening. You don't want to get rusty, but figure out how to keep yourself calm and safe. And here you go, practice with on demand. So Thinkorswim, and I think I've heard some other platforms too, basically have a DVR for the stock market, and you can go back and you can practice stuff. I still do it to this day. I see setups. I'm like, man, how did I miss that setup? I will actually go back and I will relive that setup so that I can just practice. What did I miss? What do I need to look for? How do I see it? And I'll just try to train myself and figure out what that looks like. So really, practice. And then study with a methodology that resonates with you. This is really kind of the biggest ones. Okay. We have a lot of traders. It's simpler. We all have different ways. Some of them are going to work for you. Some of them are not. Gosh, my favorite mentor, her name's Sue. I probably talk about her all the time. You know, I could never trade the way she traded. It was kind of like one of those people who they can hear a song and they can sit down at the piano and just start playing it. That's not me. I needed somebody who I could like step by step tell me what to do and how to do it. And so what I did is I learned everything I could from her, and then I learned everything I could from somebody else, and then I learned from somebody else, and I started taking the pieces that worked for me and making my own trading style. And now that's how I have the Moxie indicator and the Moxie method. So whether I check out all the boxes for you, maybe I don't. But if you like what I do and you like what somebody else I do does, and then you put them together, that might make the perfect system for you. So make sure you have something that works for you, okay? And if it just is like Greek, don't be ashamed to move on. Keep looking around until you find something that really makes sense to you, and you'll know when it does. All right. So what we're going to be having coming up April 5th is the Moxie Indicator class. You guys have seen everything that I can show you about how we were doing in 2024, how the market changed, how we're even trading nowadays, even with some options, some SPX, zero DTE. I've kind of got enough of a toolkit that I can kind of handle what's going on with this market, and it all surrounds the Moxie indicator. Whether I'm day trading or swing trading, you name it, it's the Moxie indicator. So I want to make sure that it's been about 4 years since I've taught this class. It's been a while. And I figured this was the market. Like it was great earlier when 2024 was going. Eventually, I think this economy will get back on track and we want to be ready and we want to be prepared for when this thing goes. Okay. So that's why I've started teaching this class so that we can get in here and get it learned. And then you guys can be ready and prepared for when the market gets back on track. Because come on, we know the market's going to right itself eventually, right? Even in 2022, it eventually righted itself. And then we had a 2-year bull market. So if you guys come in here, this is going to be the early bird discount. So remember, the class is on the 5th. So as long as you purchase before the 5th, you're going to get the early bird discount. You're going to get everything that I have. Somebody was asking about, hey, do you have scans? Yes, we have Moxie indicator scans right there. We also have the Moxie stock watch list. And what this is it'll sort your watch list on Thinkorswim through the lens of Moxie. Okay, did it fire a price trigger within the last 2 or 5 days? Yes. Is it in an uptrend or downtrend based on the Moxie indicator? Yes, no. All these kind of things. And what it does is it helps you quickly kind of hone in on your watch list and how it's doing and start to sort your names that way. You get the, of course, Moxie indicator installation session. We want to make sure you know how to do it. We've actually streamlined this over the years, so it's even better. And then you get the indicator and the class. And again, it's been 4 years, so I've even learned some stuff over the last 4 years, and I'm incorporating that into this class. Now, the other bonuses. So if you guys just get the basic, you're not going to get these. I'm hearing, as I've been talking about this more and kind of putting some videos out there, people are really, really interested in this ETF breakout session that I'm going to be doing because I had no idea that this was such an interesting thing that people were, concerned about. But I like to use ETFs and I like to use leveraged ETFs, and I feel like they tell a certain story that you don't really see in other things. FNGA, it's telling me things that the regular NASDAQ or XLK ETF is not telling me. Okay. SOXL, the leveraged ETF of the semiconductors, that was telling me the bottom of the market in 2022. And so these are the things that I'm able to use and leverage them and figure out how they communicate to me. And again, I'm surprised that people were so interested, but hey, I want to make sure you guys get it. And then, of course, I'm going to be doing a zero DT breakout session. So, kind of a refresher. I originally started this class by saying I taught myself how to day trade and I taught myself how to use zero DTE. And the whole thing that changed it was that I discovered that you could actually plot options the same way that you plot charts, stocks, with price, with the Moxie indicator, with moving averages. Like mind blown. I didn't know this. And so the fact that I could now trade options the way I trade stocks totally revolutionized my ability to actually trade zero DTE or just even trade options in general because now I can visualize them. So I'm going to be showing you guys that whether we do long calls or long puts or the other side of it, we sell put credit spreads, we sell call credit spreads. So that's another thing that I'm going to be showing you guys. And then, of course, the Moxie Indicator Mastery. Basically, I feel like you learn all these things and you can learn it and then you can try and do it on your own. But wouldn't it be better that when you learn it and we teach it, that you come back in and you kind of get some continuing education? You can come in here, you can ask me questions because trying to actually apply this stuff, you're still going to have questions and we're still going to have a moving market. And then, you still might want to be given the fish as opposed to learning how to fish until you really kind of get this. So it's really recommended that you guys kind of come in here and get the Moxie Mastery. That's the trading room. And if you get the annual subscription, you save a few $100s because it's an annual subscription as opposed to quarterly. So we get a lot of people who do that option, of course. And honestly, I did the math. I think it was like $5 a day. $5 a day to get continued learning, education, to get trades fed to you, and to be part of a community that is really quite fun. You guys see some of the testimonials or the chat that's in there, and people really build friendships in there. It's good. We have a lot of people who've been here for a long time. Now, the other question I know a lot of you guys are probably going to be asking, because I'm sure, again, I see a bunch of people in here have been asking, what about people who are already subscribers? Well, we do have a discount for you too. So make sure that you're logged in and so that you can see the right discount because everyone's kind of got a different program as to what they're logged into. And so we want to make sure that you get the right discount for your setup. Okay. So this is kind of just some basic ideas of what it's going to look like. But yes, existing subscribers do get even more discounts. So we're taking care of you. I want to make sure you guys know that. And then as far as that early bird packaging, we're going to be coming here. I think you guys kind of get it. We're going to be doing the Moxie class, the indicator, ETF segment that I do. We're going to be talking about the SPX breakout session, which is zero DTE, and kind of how we do all this stuff, whether the market's going up or if the market's going down. And then with this elite package, you're just going to be getting all this kind of stuff. So I want to make sure that you guys are enjoying it. Again, you get the full year if you do the big one. You get even more discounts if you do that. And really, the whole point is that we're here teaching you how to trade and do well in this market. So that's kind of, as I said, I think the market's going to eventually right itself. We want to be prepared for it, and we want to know how to take advantage of it. And then along with this, you're going to get the daily live trading that's in the Moxie room. Again, I am on the mic practically every day, sometimes 3 hours a day. Like today, I think I was on the mic for maybe 3.5 hours. And so you guys really get to sit there and experience this stuff with me and sit right next to me, the professionals that we are, rubbing shoulders with Sam, Henry, Danielle, all these people, and you get to really learn from this stuff. And so you get to ask me questions. I answer all of your questions, and you just get continued education because I'm telling you, the 3 or 4 hours of the class that I'm going to try and do, there's so much more that we can just go on. And if you guys like the stock market, you're just going to want more. Okay. So make sure you kind of get in here. And I don't know. I think you might find it a little addicting to be in here. It's going to be fun. Okay. All right, so this is what it looks like as far as my room schedule. So I know a lot of people will be like, okay, so we took the class, we're in here, but are you actually on the mic? Yes, we are definitely on the mic. I'm on camera often. And you can see here, Monday, Tuesday, Friday, all these days, these are my mic sessions. And sometimes if the market's kind of a little bit crazy or somebody has some question, I'll actually just hop on. I'll be like, hey guys, I'm gonna be on the mic in 15 minutes. Let's hop on. So remember, this is what we're going to be getting. You get the Moxie indicator, the class, you get the watch list, the scans, and then, as I said, the bonus, you're going to be getting the ETF breakout session. So again, how I used ETFs and leveraged ETFs to help tell me what the market's actually doing. And then we're going to talk about the zero DTE, basically a very nice refresher course showing you all the things that I have learned since I've been doing it. And then again, subscribers, you guys get your own pricing too. And then make sure if you guys have any questions, call, email. We've got great technical support. We got a lot of people. All of our technical support people know all of our classes and know our traders very well. So if you have a specific question, they're going to be pretty knowledgeable about how to answer it and make sure that you're guided into the right thing that's right for you. And I think, yeah, here, interest-free payments with PayPal credit. So, again, we want to be respectful of people's financial situations and your account size and all that. And if you guys want to sign up, but you want to spread it out a little bit, hey, that's fine. This is what PayPal is here for. 0% interest for 6 months. Okay. I think it's a pretty good deal. Helps get your foot in the door. This is education. And you know what? Why pass up on education? Because the market's going to be here forever. You're going to have retirement accounts. You're going to want to be into this. There is a reason you're here in the first place, and we want to make sure that you have a nice, smooth, easy way of getting yourself into the door. Okay. Um, Justin, let's see. Are the indicators only available on Thinkorswim? No, actually, the Moxie indicator is available on Thinkorswim, and it's available on TradingView, and it's also available on StockCharts.com. And yeah, anonymous. Yeah, any discounts for existing Moxie customers who want to take the new class? Yes, we do have discounts. Just make sure that you call or talk to customer support. Make sure you're logged in. That's what they're telling me because they need to make sure that you're logged in so they can see what your subscription levels are, and then you get discounts based on that. So yeah, of course, yeah, we want to make sure we take care of you guys. And yes, everything is recorded. So you will be able to see this as soon as Daryl gets it compiled and recorded and then sent out. So yeah, absolutely. We don't want to be keeping any secrets from you guys. That's what we're here for. We just want to make sure that we get the information out there. Um, some of this stuff, it's not timeless. It's definitely, we got current events going on. And that's why for the next webinar that I'm going to be doing, which is going to be a week from today. So next Wednesday, I'm going to be doing another one. Yes, there will be some similar things, but the market's going to be different a week from now. And I want to do a little bit different focus more on the day trading stuff and kind of talking to you guys about how the shorter term trading has been going, especially since this market has changed and has become more volatile as far as the day trading stuff. Yes, so yeah, long time simpler member, boy, going all the way back to trade the markets, TTM. So, yes, there will be discounts. I don't know what they are. Just make sure you're logged in and that you guys get the proper discounts. Let's see, from YouTube, how about buying and holding some king stocks and hold them forever and then use the options to trend trade the stock? Okay, so this is another thing actually that I've been hearing a lot. I like to watch other YouTube traders and see what's happening. And I've been seeing a lot of people talking about leaps. Basically, you buy a leap and you trade around it. It's kind of the same idea as holding stock, and you can sell covered calls or you can sell puts against it. That's another trading style, sure. Now, the only challenge is that if you really do own something and you want to say, "Oh, well, I'm going to keep it for years and I'm just going to trade around it." Great, you can do that, but then you'll have to, I'm just going to say, you're going to have to make sure that you can sell against it enough to offset any losses. What happens if we do go into a bear market and this name goes down? What if you bought the stock at the wrong place? That's another thing that we're kind of concerned about. Let me get back here so people can see what's going on. Um, like think about RCAT. RCAT was up 1,000% and now it's down 65%. What if you bought that at the top and you're trying to trade around it? Can you make up some or all or any of that loss by selling calls against it? I'm sure you can. Will that stock ever come back? I mean, that's kind of the other risk. And this really just comes down to your personal trading style is you got to pick a stock that will continue to exist into the future. Like, what if you buy a stock that's up and then down and just never goes anywhere? I'm trying to think any of the electric battery companies that had, huge moves in 2020 and then they're just dead, So, I just can't try to think of a battery stock right now. I'm like, got it in the picture in my mind. So, bottom line, it's a strategy. You just have to decide if you want to do that. Now, the Moxie indicator can help you because it can help tell you where the tops and bottoms are. For example, today, Tesla. We were in Tesla. We sold out a Tesla yesterday. If you wanted to, you could keep Tesla. You could sell some calls against it. TEM, the Nancy Pelosi stock, same thing, had the same setup, the same Moxie setup. You could sell some calls against that yesterday, and then it went down. In fact, I was looking at one. I sold a 10-day call against TEM, down 50% today, 50% into my pocket. So, of course, there are ways to work around that. Okay, well, that actually looks like that was a pretty clean hour, like right on the dot. So nicely done, guys. Thank you to everybody who was helping to moderate this. I know we got Lorna out there, we got Daryl, we got Renda. So thank you to everybody behind the scenes that made this possible and happen, and thank you to the Moxie or the the simpler team who helped me come up with the presentation and really put the finer point on this. I hope anybody else who's out there watching this enjoyed it, got something that you can take away from this. And I know we have a bunch of Moxie subscribers who are watching this too. I hope you guys enjoyed it and learned something as well. And I'll see you guys back in the trading room bright and early tomorrow morning. We'll see what the market throws at us and see if we can keep working this market. So again, today was kind of a fun day. We did take a few trades and we really nailed the top as far as the market and that pullback today. So spot on. All right, guys, thanks again. And we'll see you tomorrow and then we'll see you next week. And I hope to see a bunch of you guys in the Moxie class on April 5th. All right, guys.